Welcome everyone. Thank you for joining us today for today's webinar. My name is Yvonne Chen from Knight Frank Singapore, International Project Marketing. Today, we are presenting to you on UK Lettings Update and Furnishing Solutions presented by our very own team from Knight Frank London, offering bespoke advice to investors of London, new build properties to maximize return on investment through lettings, property management and interior furnishings. I'd like to introduce today's presenters. We have Tom Beale, Head of London Research at Knight Frank, Lucy Santander, Customer Care at Knight Frank London, Tara Welsh, Head of London Knight Frank Interiors. Joining Tom, Lucy and Tara for the Q&A panel discussion will be Gary Hall, Head of London Knight Frank Residential Lettings. If you have any questions during the presentation, please type them into the question box in the control panel. I'll bring them up during the latter part of this webinar. Now, without further ado, we will turn over the time to Tom Beale to give us an expert insight into the residential property market. Tom, over to you.
Thank you very much, Yvonne. It's a pleasure to be able to present to you all today some of our thoughts on the UK lettings market. I'm going to talk for about 10 minutes and we'll split my presentation into three separate areas. First, I want to take a look at the economic backdrop for the UK property market and what that means for tenants and landlords. I shall then look at what the latest data is showing us about how the lettings market performed during lockdown and what is happening now as we leave it. And finally, I will look at how attractive property is as an investment in the current economic climate. So my first slide, a look at the economic backdrop in the UK. There are several different economic forecasts that help us anticipate what will happen to property markets. And you can see three of them on this first chart. Oxford Economics forecasts a 6% drop in GDP this year before a 7% increase in 2021. The Office for Budget Responsibility forecast is much steeper for 2020. However, for an investor, it's important to be aware of the wider context. Now, we will see some negative GDP data tomorrow for the UK, but the important point to remember is that it relates to April and is therefore historic, and things are moving quite quickly at the moment. At the end of last week, for example, we saw US jobs data for May, which took everyone by surprise, and stock markets rallied. Indeed, the FTSE 100 is now trading 30% higher than it was when we went into lockdown. And the point to make about what these lines show and what they all have in common is that they predict a sharp decline this year, followed by an uptick that broadly is the mirror image of the decline. Next slide, please. I now want to look at a couple of ways that the current downturn doesn't mirror the recession of 2008, how it's different from 2008. First, the chart on the left shows how unemployment is not expected to climb as high. Now, this is in part largely due to the unprecedented government furlough scheme. Oxford Economics expects unemployment to peak at around 7% before falling back much more quickly than last time. Other forecasts are steeper, but there is still broad agreement that the impact on employment will be more limited than we saw after the 2008 recession, which you can see on this chart here. So in other words, we will avoid that prolonged overhang of unemployment, that prolonged period of unemployment that we saw after the last recession. I now want to draw your attention to the chart on the right, which is just a reminder, which I'm sure everyone listening knows, is that interest rates have been ultra low in the UK now for a decade. Now, what this has done for the housing market is provide a stable backdrop in recent years. Despite all of the tax changes that we've seen, we haven't really seen much in the way of double-digit annual price movements in either direction. Last time round, in the recession 2008-2009, interest rates were at 5 or 6%, and many landlords were forced to sell because of the financial pressures, which is less the case this time round. So comparisons with 2008 are of limited use, and there are reasons to believe the property market will rebound more quickly this time round. In simple terms, this does not feel like the global financial crisis part 2. Next slide, please. And that rebound effect that I mentioned is certainly what we've been seeing in recent weeks in terms of tenant demand. So as you can see on this chart here, there was a spike in new tenants registering last week. It was actually, I think, the 4th highest weekly total of new tenants registering since our records began. And what you can see is that the seasonal pattern of activity, with all of these lines rebased back to the same point at the 28th of March to 100, you can see the seasonal pattern of activity in 2020 stands in contrast to previous years. And what you can see is that the pent-up demand is now coming through into the market. In fact, the number of new tenants who registered with us last week was more than 5 times the figure that we saw in the first week of lockdown. New slide, please. That said, supply was more resilient while the UK property market was in lockdown, as you can see on this next chart. Again, taken back to a point in March, rebased to 100, you can see that the orange line, which was the number of new properties coming onto the market, held up better than demand. Now, what that inevitably does is to put some short-term downwards pressure on rental values. However, as you can see, demand is now coming back more strongly than supply, and that imbalance appears to be reversing. Just to highlight that point, the number of tenants that we had registering with us last week was 40% above the 5-year average. Next slide, please. If anything, the lettings market has woken up more quickly than the sales market. When we compare last week with the 5-year average, we can see that viewings were actually up by 1% compared to the 5-year average, despite the social distancing restrictions in place. Meanwhile, in the sales market, they were down by 9%. Similarly, the number of properties where Knight Frank was called out for a market valuation was 19% above the 5-year average for lettings, but 21% below the sales. And as you can also see in the middle, web views were also quicker to bounce back for lettings properties than for sales properties. Next slide, please. Now, there is also still a sizable currency discount by historic standards for overseas tenants and investors. The pound has recently come under pressure due to talk of negative interest rates. It's merely speculation, but also around the prospect of a no-deal Brexit. For example, a tenant denominated in US dollars has seen their spending power grow markedly in recent years. If their budget was the equivalent of £1,000 a week at the start of 2014, for the same dollar budget, they can now afford £1,420 a week property in prime central London, given how the pound and given how rental values have moved over recent years. Next slide, please. We have also, of course, seen bond yields fall in response to the pandemic. However, at the same time, property yields in London have remained relatively resilient, as you can see on this chart. Prime gross yields are currently around 3.4% in prime central London, 3.6% in areas of outer London. Prime London property, of course, has traditionally been held for the capital value appreciation. But as you can see from this chart, the difference between the so-called risk-free rate of a 10-year UK government bond and property, that spread has never been greater. So in a low-yield world, the appeal of property in the UK has never been higher. Next slide, please. The other great appeal of property, of course, is its lack of volatility. And given what we've seen recently with the oil price and on stock markets, that is truer than ever at the moment. What this chart shows is the quarterly price change for the FTSE 100, UK property and prime central London. And what it underlines is how property is inherently less volatile than other asset classes. That's precisely why it's held by institutional investors as a hedge in their portfolios of stocks and bonds. Now, while we've seen property prices dip over the last 3 months, we believe that the worst of the declines are now behind us and prices are starting to bottom out, particularly given that demand is currently outstripping supply in the sales market in a similar way to the lettings market, as I showed you on previous slides. And my final slide, please. So to pull all of that together and to make some conclusions. First, the economic data points to a rebound that will mirror the declines we are seeing. The wider economic conditions are also different enough from 2008 that we believe this is not a repeat of the global financial crisis. Second, lettings markets in the UK have rebounded strongly to the lifting of the property market lockdown in the UK, more strongly, in fact, than the sales market. And finally, given the economic uncertainties, the appeal of holding property is more relevant today than ever. Thank you very much, and I will now hand back.
Thank you, Yvonne, for having us here today, and hello, everyone. So some of you may know, Knight Frank Customer Care assists purchasers of new build properties from exchange to completion and beyond, offering assistance with financing, furnishing, and lettings and management. So I would just like to share some positive news with you all today with regards to our new build areas in the lettings market. So yes, thank you. So in Wapping and Battersea in the last week, we've had 7 deals agreed. And for Battersea and Riverside, 15 tenancies agreed for June, which is very positive news. In Canary Wharf and in the Wapping offices, they're still hitting targets and doing business as usual. We're securing very good tenants. The general demand and the sweet spot is generally for new build furnished properties. And we're also tapping into our corporate services department, who source tenants from banks, embassies, relocation agents and large institutions who are starting to come back now. Please, can I go on to the next slide? So what we can do for you. Knight Frank Customer Care can offer you a free handover service. We can assist you with your non-resident landlord registration for income tax purposes. We have a multilingual lettings and property management team. And if you are interested in investing into London property, but want to find out more about estimate rental values and the tenant demographic in the area, then we are here to help. Likewise, if you have a portfolio that you would like us to review, perhaps on pricing and just to make sure that you're maximising your return on investment, then we would love to help. And that's all for me from now, but I look forward to answering your questions in the Q&A. Over to Tara.
Thank you, Lucy. Thank you, Tom. Very insightful there and positive news all round. I'd like to introduce myself. I'm Tara Welsh and I'm the Director of Knight Frank Interiors. We work very closely with our team out in Singapore and our lettings teams in London to make sure properties are ready for showcasing for the rentals market. Next slide, please. So we have one dedicated team that focuses on all of our Asia business centres with our design house based in central London. Not only is our furniture packages design-led and put together by our interior designers, but we very much focus on it being quite intelligence-led as well. So we'll look at the rental returns that you'll be looking to achieve on your property. We focus on the tenant demographic in the area, and all of the internal specifications of your apartment are taken into consideration when we're presenting and suggesting the right property furniture package for your property. All of our furniture packages are fully regulated with the fire safety standards that are here in the UK, so everything is fully compliant and checked. It also comes with a 5-year manufacturer's warranty, so you are completely covered in that time. It's design-led, so we look at the tenant demographic and attracting the top end of the market, making sure we're taking that into consideration when making our suggestions to you. And encouragingly, all of the properties that Knight Frank Interiors furnish achieve 97% of the asking price. Next slide, please. So just to show you some live examples of some recent projects we've been working on. Royal Mint Gardens is a new build development in the Tower Bridge area. Knight Frank Interiors have worked on over 40 units within this development. Here you'll see a before shot and an after shot, and this property let on the first viewing for the asking price. Next slide, please. And not only does Knight Frank Interiors focus on new build properties, but also on secondary market too. This property here was on the market for 6 months unfurnished. Knight Frank Interiors went in and furnished the property for the landlord, and it rented on the first viewing at £1,200 per week. Next slide, please. And we'll now take you to our Q&As. Thank you.
Thank you, Tara, Tom, and Lucy. We will now start the Q&A panel discussion with some common questions that are important for Singapore buyers. For the first question, it's for Gary. Gary, what issues are you facing with letting out properties with the current COVID-19 situation?
Good afternoon, everyone. In terms of problems, we've actually been very active since the lockdown that we experienced on the 24th of March. The rental market for us has been very busy, mainly focused in the market between £300 per week and £1,000 per week. But logistics-wise, it's been pretty active. We've not had major issues in terms of moving tenants in. We've been respecting the social distancing rules, and over the past couple of months, we've been pretty busy in terms of tenants moving out and tenants moving into properties where needed. So now we've moved out of that and restrictions are slightly relaxed. We're in a good position that we can continue to rent properties and maximise returns for landlords. The only issues we're finding is in terms of the actual market conditions. What Tom said earlier, with the numbers of properties that have come onto the market, we've seen prices soften slightly, and that's now with the tenant market rebounding and we're starting to see increased activity, that will hopefully start to level out. So the only issues that we've got at the moment is just managing pricing expectations, achieving the best possible rents for our landlords, and getting properties let as quickly as possible. The prime market, which is, as we class it, between 1,000 per week and 5,000 per week, has been slightly quieter, potentially due to families and the school restrictions, but we're now starting to see that improve, as well as the market at the real top end. So in terms of the COVID impact, we have high stock levels, there's lots of properties available to rent, but as we said earlier, there's lots of tenants now coming through looking to move, and those conditions should start to level out as we move into the summer months.
Thank you, Gary. The next two questions will be for Lucy. Lucy, now that estate agents are back to work in the UK, how are viewings taking place with social distancing measures still in place?
Thank you, Yvonne. Well, firstly, it's important to mention that with the new measures in place, this requires agents to send a video viewing to a potential tenant before booking in a physical viewing. So this will just make sure that they're a serious applicant. And when doing a physical viewing, our negotiators, it will be only one negotiator with the applicant, and they'll be wearing full PPE as well to make sure that they are safe and also adhering to social distancing rules in the apartment. In preparation for the UK lockdown, many of our offices actually took videos of all of our empty or recently completed properties and made these videos available to be viewed on all major property portals. So even now that we are allowed to do physical viewings, our new build offices are still very busy agreeing tenancies through virtual viewings. I guess it's important to mention as well that for applicants who don't feel comfortable doing a physical viewing, we can do FaceTime viewings. So one of our negotiators is happy to go to a property and do a live walk around on FaceTime with the potential tenant, and they can also show them the professional photos and videos that we've got for it as well. We also find that some corporate tenants and relocation agents will take a property unseen just based on a video or photos. So I think in summary, whilst there are new measures in place, we are still agreeing new tenancies based on virtual and social distance physical viewings.
Right, Lucy, but what about new built apartments that will be completing soon? Do buyers need to fly to UK, or how can they make sure it lets ASAP and make it as attractive as possible?
Okay, so I think in answer to the first question, the answer is no. If you appoint us to let and manage your property, you will not need to come to the UK. So we'll go and do your handover for you. We will appoint a property manager to go to your property who will do a visual snagging survey to check for any defects, and they will also collect the key for you. In terms of making your property more attractive, there are a number of things you can do. One thing is allowing tenants to opt in to a zero deposit scheme, which will free up upfront cash for them and also help you let your property quicker. It is absolutely crucial to furnish your property. We find that the majority of tenants in London search for a furnished property, so furnishing it will help us push for an earlier move-in date where possible. And as I touched on earlier, we found that in lockdown, the sweet spot for new tenants is new build and fully furnished properties that are ready to move into. I think another point is that in this market, it's really important to be flexible. It's important to entertain all sensible offers that you receive, as taking a potentially lower rent for now will leave room to negotiate a rent increase on renewals, and it's much better to have a tenant in your property paying rent than an empty property. I think that's it from me.
Right, thank you, Lucy. I'm sure that's one of the commonly asked questions among Singaporean investors. The next two interesting questions will be for Gary. Gary, a current tenant is due to vacate the flat in the next few weeks, but now has nowhere to go and does not want to leave. What are landlord's options under the current COVID-19 situation?
Thanks, Yvonne. It's a tricky one. The government in the UK have put a temporary ban on evictions taking place. The first period was for 3 months and it was due to expire on the 24th of June. That's now been extended until the end of August. So as a landlord, your options are quite limited. The best thing you can do is just to have a conversation with the tenant, and there is a very good chance that you'll need to extend the tenancy and allow the tenant to stay in place. We're having conversations with landlords and tenants whenever these situations come up to try and find a solution that works for both parties. But at the moment, starting proceedings to evict a tenant is not possible in the UK. So it's having a constructive conversation and trying to come to a solution that works on both sides. And hopefully it's not a problem for if you have already rented the property. But it's something that we just need to discuss, and it's a case-by-case basis.
Right. And Gary, what if tenants ask for a rent holiday? What are the landlord's options?
Again, similar to the last question, it's something that we'll discuss and have a chat. We've got quite strict processes in place to ensure that if a tenant's coming to us and asking for a rent holiday, we're investigating the reasons why. We're looking at the information that's provided, asking for evidence if they've received a salary decrease or they've lost their jobs, and ensuring that we're protecting our clients wherever possible. Encouragingly, we've only seen a small number of tenants in London come to us asking for rent holidays or saying that they're unable to pay their rent. It's less than 4% of our total book size. So we are in a lucky position that we've got a small number of tenants that are doing this, and it hasn't really affected the market. The only thing, as I said before in the first question, that's affecting is the large numbers of properties that are available and rent softening slightly. So tenants not being able to pay their rent hasn't really affected the market. And when tenants do come to us, we have the discussions with the landlord, investigate it as much as possible, and do as much as we can to come to a solution that works for both parties.
I see. Gary, what is the trigger for the tenant demand rebound?
What's the trigger for the tenant demand rebound? I suppose it's we need to get back to a normal level of instructions on the market. Last summer we had on average 11 applicants to every one property, and then we saw price growth. We're now kind of in a very different position in terms of that. We've not looked at the exact numbers, but it's much lower. So once we start to see the volumes of properties even out, we don't have the large numbers of instructions that we have, which will happen quickly with the numbers of applicants that are coming through. The prices will come back to their normal levels, and we'll start to see rental growth as we did last year and the year before.
Thank you, Gary. The following question for Lucy. Lucy, is now a good time to discuss rent increase or reviews?
Thanks, Yvonne. To be honest, not really, even though we are emerging from lockdown and there are new measures in place and less restrictions. It's still a really sensitive time for people, both emotionally and financially. And if your tenancy is up for renewal and your current tenant pays their rent on time and generally looks after your property, then I'd say it's better to keep them happy for the short term rather than risk losing them.
Thanks, Lucy. Now, a couple of questions for Tara. What budget should buyers have for furnishing, and is it necessary? How long does the furnishing usually take to install?
Thanks, Yvonne. I think when we're looking at budgets, as I said previously, we do look at the property, the area that the property is in, the tenant demographic look in that area, and the rental returns that the landlord will be looking to attract. And from there, we will base our package price on all of those factors to make sure that you're not spending too much or too little on furniture. And sorry, the second part of the question, please, Yvonne.
How long does it take to furnish, usually?
So just coming back to what Lucy said, we try and have everything prepared before completion. So we will have those conversations with you and agree everything in principle. So once we have all that agreed in principle, we'll have everything ready in our warehouse before your legal completion and handover. And then upon handover, once property management have collected the keys on your behalf, if you're not in the UK, the installation will take 1 day, and then the property is fully ready to be marketed.
All right, can buyers furnish it easily themselves, and what do tenants require as a minimum?
Buyers can furnish it themselves, and I do speak to buyers about different solutions, and they ask me what my viewpoint is. I tend to find those who do go off and try and furnish it themselves normally come back to me a few weeks later and say they're having a bit of a nightmare. Because there's things that maybe haven't been considered. We do a lot of pre-site checks on the apartment, so we will go in, measure up, measure the access points in the lifts, in the doorways, check all of the dimensions and electrical points to make sure all of it is moved in pretty seamlessly. There are just certain points to consider when our surveyor goes onto site and does all of those checks. And also just managing the logistics and delivery side of things. If you're coming to London to furnish your own property, you probably need to allocate a week or two to be in the property to manage those deliveries coming in and out. If it's done by our team within 24 hours, we're in, assemble all the furniture, and then the property's ready. In terms of an inventory, we have standardised inventories based on your floor plan, but again, our team will kind of CAD up and make sure everything fits the floor space well. It doesn't look too overcrowded or too reduced. But we do find tenants, or the tenant demand is for a fully fitted out apartment, so a bit like a serviced apartment feel.
Right. And Tara, do you think quality and style of the interior help attract better tenants in order to attain better yields?
I think in the market at the moment, you know, when you've got a development with lots of apartments completing, it is important for your apartment to look competitive. You know, if you have a 1 bed and there are 5 or 6 1 beds completing at one time, we carefully consider each unit, making sure that there's points of difference between each of those, making sure it's stylish and making sure you are attracting that kind of higher level tenant quality. So all of those things are considered, and I think they should be considered when you're looking to fit out and choose a furnishing supplier for your property.
That's interesting to know. Thank you, Tara. The following 3 questions for Lucy. Looks like we've got quite a handful of questions for Lucy today. Lucy, if the property is due to complete later this year, when should buyers start to prepare?
Thank you, Yvonne. Well, essentially now is the best time to start preparing. So we would recommend having initial conversations with a lender or a mortgage broker at least 6 months before completion, because finance deals can be arranged in principle and then extended if needs be. Also, it means that your broker or lender will have all of the necessary paperwork to hand if things do change, which they often can. So also on the letting side, we won't charge a penny for lettings until a tenant actually moves in. So there's no harm in getting all paperwork done in advance. And as Tara has mentioned already, it's a really good idea to arrange and agree your furniture in principle in advance too, just because completions can come around quite quickly, and we want to make sure that you're prepared for us to start marketing once you complete, just so we can minimise your void period for you.
Right, I see. And Lucy, what are the benefits of registering with HMRC as a non-resident landlord?
Okay, so as some of you may or may not know, as a non-resident landlord, you will be liable to pay income tax on your rental income. So it is a good idea to register as a non-resident landlord with HMRC in the UK before you complete, to avoid your letting agent having to withhold 20% of your gross rent for income tax purposes. Once you register, and it's quite a simple and quick application which we can guide you through, and we receive your approval letter from HMRC, then we'll pay you your full rental income in full so that you can prepare an end of year tax return. Also, as a non-resident landlord, you can get various allowable expenses which you can offset to reduce your tax liability. But we also do have a tax service. So we've got a consultant who can do your application and submit your tax return for you if you would like some help with that.
I see. What is zero deposit?
Okay, so a zero deposit is essentially a guarantee that replaces the traditional security deposit. And as a zero deposit landlord, you receive protection equal to a 6-week deposit, even after the deposit cap. So from the Tenant Fee Act of 2019, a standard deposit has now been reduced to 5 weeks rent rather than 6 previously. So tenants can purchase a no deposit guarantee for the equivalent of 1 week's rent, making renting for them much more affordable. And this can also help speed up the rental process for you and reduce void periods. Also, it's important to mention that tenants will remain liable for any damages or rent arrears.
I see. I thought it was compulsory in UK to enter the rental deposit scheme. Do you have any figures on the success rate if the landlord chooses not to take any deposit or a lower deposit?
So we find that when we offer, so if a landlord agrees to offer the zero deposit guarantee, it is up to the tenant if they want to go ahead with it. But we do find in some areas that offering zero deposit makes the renting much quicker, just depending on the demographic of the people looking. I don't have any firm figures, but I can send some out after this to everyone who's registered, just with some information on that. Also, when it comes to international students, they still have to use a standard deposit. They can't use a zero deposit guarantee.
Thank you, Lucy. Gary, would you mind to take the following 3 questions? Has the corporate tenant market changed much? Have enquiries level dropped off?
The corporate tenant market has been pretty good. Again, within the price brackets I mentioned before, below £1,000 a week, we're still seeing consistent demand, and that hasn't changed. Above that, it's been slow to pick up, but we're starting to see that come through now. There obviously, with travel restrictions, we're not seeing as many people come into London. There has been some stories of new people coming across from Europe, and that will just continue to grow. So I think the corporate market is going to be slightly weaker this year. That's just going to happen, as will the international students coming into London. But there's enough domestic demand from the existing tenants that we have in London to satisfy the supply that we've got available. So it's going to drop. I think that's going to happen, but we've already started to see that come back through. And sorry, the second part of the question? Sorry, Yvonne, you're on mute.
Sorry. Where are some hot spots in London, and where is it easy to rent out?
Okay, hotspots in London. It's I think it's less about the hotspots, it's more about the product. We're definitely seeing a flight to the new build market, and not just saying this because we're sitting on this panel. We've definitely seen an increase in terms of people taking brand new apartments and properties. If you're taking something virtually, knowing that the property is brand new, it's a very easy decision to make. Everything's going to be clean, everything's going to be in excellent order. You know the building, very similar, we can see floor plans. So it's more, we're definitely more seeing the product than the locations, and people are now, with working from home, it's less about where they need to travel to. They want to be in a certain spot, or it's more about the type of apartment. And over the past couple of months, the new build properties have definitely been the highest in terms of demand.
All right, thank you, Gary. What is the vacancy rate in central London today?
The vacancy rate has increased. I don't have the updated figures in terms of it, but we would see a slightly longer void due to the increased numbers. We're in a position now where we're at slightly different conditions to what we're normally used to in the kind of June, July market, where properties normally rent within a couple of days of coming on. I'd expect for your typical 1 and 2 bedroom flats in a new development will be taking probably 2 to 4 weeks as opposed to 1 to 2 weeks previously. So I think you need to allow for a slightly longer void period while stock conditions start to level out and balance.
Right, and what is the percentage of Londoners renting a property now?
The latest stat was 27% of all of Londoners renting properties, and that's increasing year on year. We've got more people that are accepting that this is the tenure of choice, that they're comfortable with rental solutions, and with the types of properties that are now available. Tenants are, well, everyone in London is happy to rent properties. So we're starting to see a larger number of people rent properties and just continue to do that. So it's quite a high figure, and it's continuing to grow every year.
That was certainly insightful. Thanks, Gary. Now to the 2 questions following, 2 questions for Lucy. Lucy, what do you see in tenants' requirements when looking for a place to rent?
Thanks, Yvonne. Well, I think Gary's touched on this in his last questions, but we generally work with a range of tenants, but we find at the moment that the sweet spot is new builds and furnished properties. They would like the properties to be well finished, so something smart and also luxurious, especially with now people working from home. Amenities, nice amenities and a comfortable feel. 24-hour concierge and a sense of safety is also quite important for some tenants. Normally they would like to be close to a tube or a train station and be in a well-connected area. And also to have a high quality furnished property. That's very important to tenants as well.
All right, Lucy, what is the average time for a listing to be on the market before it is rented out?
Yeah, well, I think Gary's also mentioned this one as well, but in a normal market, it can take 1 to 2 weeks. But as Gary said, we should expect on average a slightly longer void now, so from 2 to 4 weeks. Generally, studios and one beds let quite quickly though, and especially coming into the summer market now, hopefully things will pick up. Usually when we get new instructions, we let our corporate services department know, so that adds some extra effort and resource to finding tenants for our units that are available.
Now to the last question for Tara before we wrap up today's session. Tara, can you give an estimate or even a range for the furnishing by numbers of bedrooms?
Thanks, Yvonne. Yes, absolutely. So what we would do is, as a kind of a standard process, we would obtain a copy of your floor plan and then map out the inventory based on the layout of the apartment. So where the formation of the windows are, if you need additional storage, or if there is already storage built in your second and third bedrooms. I suppose just going back to the point that Gary made on working on new build developments, where we have these developer relationships, we can go into the units before completion and make sure the inventory completely marries up with what we're suggesting, and then that will just allow us to create an accurate estimate for you.
Thank you very much to all our experts in the panel discussion. It looks like we've covered majority of your questions. Due to time constraint, we will get in touch with you to answer the rest of your questions you have. We certainly hope you find today's webinar insightful. Please feel free to reach out to us should you require assistance at any point. We will be delighted to help. From all of us at Knight Frank, thank you, stay safe and keep well.